Now, throughout my last 7 or 8 years of consistently investing in the stock market, I have to be completely honest in saying that at this point, I invest a majority of my cash balance back into high quality ETFs, and this is for a few specific reasons. For one, by investing into high quality ETFs, you get access to not only instant diversification, but also depending on what ETF you're investing into, you basically jump in and piggyback on the exact strategy the ETF uses moving forward. Now, on top of that, by buying into high quality ETFs, there's a lot less worrying and thinking you have to do, just because once again, you're getting so much diversification for the most part. But in this video specifically, we're going to go over a sort of less talked about dividend growth style ETF that not only offers pretty much everything that every dividend growth investor is looking for, and then some, but also this ETF has outperformed the gold standard S&P 500 during multiple different time frames. So if you want to learn a little bit more about this dividend growth ETF, look through it with me. Make sure to stick around, drop a like down below, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the dividend growth style ETF that we're talking about for this video is none other than VIG, the Vanguard Dividend Appreciation ETF. And I'm sure a lot of you guys either have heard about this one, maybe even own some of it in your portfolio, but across the dividend growth community, you don't really hear about this one necessarily as much as some of the other popular names like VYM, DGRO, or even SCHD. Now, this ETF obviously is brought to us by Vanguard, and it says the product summary seeks to track the performance of the S&P US Dividend Grower Index, passively managed full replication approach. Fund remains fully invested, large cap equity, emphasizing stocks with a record of growing their dividends year over year, low expense at that. Like I said, basically everything dividend growth investors are looking for, and then some. Now, even though we've talked about VIG, the Vanguard Dividend Appreciation Index, in the past, I still don't necessarily think this ETF gets the credit it deserves, because the fact that this ETF has grown like crazy over time, offers a decent dividend yield with dividend growth, and has a super high quality basket of holdings, I'm personally considering adding a lot more VIG to my long-term portfolio very soon here. But to give some more stats on VIG, as of right now, basically it's trading at all-time highs or very close to all-time highs. The ETF is up around 266% on the max time frame, and this is since around 2006, and keep in mind this does not even include dividends. The ETF's expense ratio is 0.06%, so super cheap to own like most other Vanguard funds. And if we were to compare this to something like SCHD, it's the exact same expense ratio, just to give sort of a benchmark. Now, as far as price return goes, this ETF is up around 13% year over year, and year to date, the ETF is up around 11%. So because of this ETF's holdings, which we're going to go through here in a second, this ETF has performed very, very well, basically nonstop historically, besides a few blips in time, at least as far as the chart shows. Now, the reason this ETF has obviously performed so well is, you guessed it, it owns majority technology being around 25% of the overall fund, 20% being financials, 15.8% being healthcare, industrials being around 11, consumer defensive around 11. Then the rest of the ETF for things like consumer cyclical, basic material, energy, utilities, and communication. Now, I'm sure at this point we're seeing a trend as we've went through so many different dividend growth style ETFs on my channel. Over the years, we're really seeing the fact that ETFs, even if they are dividend growth style ETFs, as long as they own a decent portion of names like Microsoft, Apple, and others, these ETFs are going to be outperforming a lot of the other slower dividend growth ETFs across the board. Now, at the beginning of the video, I talked about the fact that I love ETFs at this point in my investing career just because of how easy it is to get diversification into so many different stocks with a single click of the button. And honestly, there's a lot less thought involved. With VIG specifically, 340 or so different stocks is what you're getting access to, although around 30% of the overall fund is made up of names like Apple, Microsoft, Broadcom, JP Morgan, ExxonMobil, United Health Group, Visa, Procter & Gamble, Costco, MasterCard, etc. Now, I'm constantly looking at different dividend growth style ETFs, especially the top 10 stocks within all of them across the board. And what I've found over time to really like is the dividend growth ETFs that have a good majority of dividend payers, dividend growers, different names in here like Costco, Procter & Gamble, stocks that consistently offer some massive dividend growth, but also it's very important to have some exposure to some of the more technology names like Apple, Microsoft, and others that are going to get the portfolio to reach new highs. At least that's what it's done historically. Now, as far as dividends go for VIG, not all that bad, not all that great. 1.8% trailing 12 month, which of course could be much higher if you were to have bought into VIG back when it was a lot cheaper. Because keep in mind, guys, not all that long ago, VIG was trading at just around $100 per share. This was back around 4 or so years ago, with another recent dip down to around $135 per share. So there was times historically to grab some of this one, but unfortunately, just like a lot of you guys, I missed out on those dips. But other than the price return, the holdings, the dividend yield, of course, dividend growth is a very important metric, with around 8% dividend growth rate on the trailing 12 months. That's very impressive. Around 11.6% on the 3-year, 10% on the 5-year. And over the last 10 years, around 8.4%, which honestly is super decent. And just as of recent, back in June, VIG paid a 90-cent dividend, which is basically 3 times more or less of what VIG was paying around 10 years ago. Now, even if you buy into stocks and ETFs that are going to double their dividend every, say, 10 or so years, that's not only going to make your cash flow overall consistently move up and to the right, but if you're an investor out there like myself that's looking to use your dividends for things like bills and other things in the future, you're not only going to hopefully keep up with inflation with a dividend growth rate of around 8 or 9%, but on top of that, if you keep buying shares, you're most likely going to end up very wealthy. But of course, as always, we have to let the numbers do the talking. We have to compare VIG to the S&P 500 and compare how both of these ETFs have traded since 1995. So since 1995, we were to compare VIG to SPY and invest $10,000 into each of them with dividends reinvested, VIG would have returned on average around 14.15% per year, which is honestly very impressive, where SPY returned around 10% more or less per year, which is also very impressive. But over those 10 years, that $10,000 investment into VIG would have turned into around $460K or around $156K from SPY. Now, comparing during this time frame, at least, again, this is just one time frame, VIG absolutely crushes the S&P 500, which is very impressive, although I think either one of us would have been pretty much pleased with either 14 or 10% return year after year after year. So either way, it does go to show, if you buy into high quality dividend paying ETFs that have the right holdings, the right names that are going to keep the portfolio moving up and to the right, the returns are going to follow, which is exactly what happened historically, at least, with the Vanguard Dividend Appreciation Index. Now, the last thing I want to talk about, and the last thing I'll say, is that I know you're probably thinking to yourself, it's very hard to choose which dividend growth style ETFs you want to invest into because there's so many across the market. They all seem good in their own ways, and there's honestly a lot of truth in that. So what I'll say, and what I've said before in my videos, is you need to really look at your own strategy. You need to look at what's most important to you. If you want to invest into something that's going to potentially pay you more dividends long term, or rather if you want to invest into something that might grow your overall portfolio long term, or of course if you want a little bit of both. At least going off of history, going off of data that we have at this point, there's tons of different dividend growth style ETFs that pretty much fit the mold of exactly what you and I are looking for, no matter what it might be. But now lastly, most importantly, I want to hear from you guys down below, when it comes to ticker symbol VIG, do you currently own this one across your portfolio? And if or if not, which is your favorite dividend growth style ETF across the entire market as of right now? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by. And if you are interested in investing, make sure to check out these recent videos I posted right here.